I'm going to show you how you can create your own algorithmic trading bots. And make sure you watch until the end because I've got a special trading strategy that you can actually implement. Now, before we dive in, let's discuss what exactly an algorithmic trading bot is. Algorithmic trading, often referred to as algo trading, is a groundbreaking approach to trading that has been taking the financial world by storm. It's a strategy that allows traders to execute orders at speeds and frequencies impossible for a human to match. Think of it as having your own trading assistant 24/7 without you ever having to touch anything. It can make decisions on your behalf and not be affected by any emotions whatsoever. In fact, a 2020 report from the US Securities and Exchange Commission noted that 78% of market trades were performed by automated trading systems and algorithmic trading bots. And even the more conservative opinions determined that 60 to 70% of market movements was due from algorithmic trading bots. These algorithmic trading bots are literally used everywhere, and there's a reason why they are so popular. Trading bots are incredibly impactful in how people can conduct trades, which is why I believe everyone should be able to access these tools. Now, you might notice online that there are many trading bots available, such as Pionex or 3 Commas. However, if you live in the US, there are many different restrictions on the types of trading bots that you could have. These different crypto bot exchanges also come with hefty fees, which I'll not go into right now. But if you created your own algorithmic trading bots, you can completely trade these assets for free. Now, there are many advantages to using these algorithmic trading bots. The first is speed and precision. These trading bots use complex algorithms to determine when they should place a buy or sell order. This means that orders can be placed within fractions of a second, capitalizing on market opportunity. The second is emotion-free trading. Humans are emotional creatures. We might buy or sell based on fear or greed. Algorithms, on the other hand, are completely devoid of these emotions, sticking very strictly to a predefined rule set. Now, finally, the third major benefit of these bots is its ability to be backtested. Algorithms can be backtested against historical data to determine their efficiency. You can easily fine-tune these bots for optimal results. These bots also work perfectly within the crypto market because the crypto market is open 24/7, which means that these bots can also run 24/7 without ever having to take a break. That means these bots will be automatically placing buys and sell orders without you ever having to touch it. Now, the major drawback behind these bots is that, unlike humans, they won't be directly able to analyze the market conditions. Rather, you have to boil down the market and the price movement to certain indicators. And these indicators might not always be correct. Now, speaking of indicators, let's discuss which indicators you can actually use with this bot. And for this demo, I'll be showing you how you can implement your own MACD and RSI trading strategy within this algorithmic trading bot. Now, using the RSI, or the Relative Strength Index, and the MACD, which is the Moving Average Convergence Divergence, is a very popular trading strategy amongst many different traders. In fact, studies have shown that this strategy actually provides an 80% win rate, which means it is an incredible combination to use. Now, let's break down what each of these indicators actually mean and how we can use them together. The RSI is often used to identify overbought or oversold conditions. Typically, when the RSI surpasses 70, it suggests that the asset might be overbought, indicating a potential reversal or pullback. Conversely, when the RSI drops below 30, it signals oversold conditions, suggesting a potential bounce or reversal. And the MACD, on the other hand, consists of 2 lines, which is known as the MACD line and the signal line. And the histogram plots the differences in between these 2 lines. The MACD line rising above 0 is considered bullish, while falling below 0 is considered bearish. Moreover, the MACD line crossing from below to above the signal line is considered bullish, and the further below the 0 line, the earlier the signal. Conversely, the MACD line crossing from above to below the signal line is considered a bearish signal, and the further above the 0 line, the earlier the signal. And finally, a divergent signal occurs when the MACD line and the price swings are not in sync, with either making a higher high or a lower low when the other is not making the same. However, it is best to avoid using the signal when the market is consolidating or when the MACD line is oscillating around the 0 indicator because it could create some false signals. And these signals can be easily used in tandem and be implemented into an algorithmic trading bot. For instance, the RSI can be boiled down to 2 simple values. If the RSI is above 70, that means we can consider the asset to be overbought, which means that we would produce a sell signal. On the other hand, if the RSI is below a level 30, we can consider that to be an oversold position and place a buy signal. This means that the RSI can be easily used to confirm any trading signals that the MACD might provide. Using the MACD in tandem with the RSI is also very simple as well. If the MACD shows a bearish crossover, which is the MACD line crossing below the signal line, it might indicate that a reversal or pullback might be imminent. And we can also look at the RSI to see whether if it is in overbought conditions to confirm that signal as well. With these 2 indicators, you need to confirm the signal from the other. The RSI tends to lead, and one thing about leading indicators is premature signals. You need a slower indicator like MACD to confirm a signal from the RSI. There might be times where the RSI is oscillating above 70 or below 30 for a very long time, so you need a slower indicator like the MACD to determine whether the momentum is turning or not. With confirmation from both of these signals, you increase your winning chances because it is more likely that the market will go in the direction that you think it will. And keep in mind, these are just two very easy trading indicators to use, and you can implement as many indicators as you want with an algorithmic trading bot. However, keep in mind, using too many signals might not be smart, just because you will rely on confirmation from each of those signals. And keep in mind, these trading bots aren't just specific to crypto as well. You can change the parameters of these trading bots to be able to access different stock exchanges that offer API information. But keep in mind that to be considered a day trader on these different exchanges, you do have to have at least $25,000 in your trading account. But without further ado, let's jump into the coding. Alright, so once again, make sure you have your Binance API and API secrets here, and make sure you have this client class here. And if you're not sure how to get to this step, once again, you can check out the videos in my description below where I go over this process. This also goes as well for this price updated class here. And this is just a very simple class where it just gets all the tickers from the Binance API and the Binance exchange. And once again, if you're not sure how to get to this step, you can also check out the video in my description as well. Now, the first thing that we have to do is create a class called algorithms that actually contains all of our different algorithms that we can use. And keep in mind, this code might be a little bit complicated for what we're trying to do here, but this is just so that in the future you can also add more algorithms to this code to create your own different algorithmic trading bots. So this is pretty much it for your entire algorithms class. Once again, you have to calculate the MACD here with the EMA function here, and finally calculating the RSI value. Now, after we're done with all of this, then we need to create another class that actually checks these symbols and checks whether they give us an indication of whether we should buy or sell. So we can simply create a class called check. And that's pretty much it. That's all you need for this. So after both of these classes, then finally we can actually get to coding out the algorithmic trading bot. So we can just call this algo bot for now. And first things first, we do need to create an init function for this. So init self and variables. So before we get coding on the actual init function, let's discuss what parameters you're actually going to be needing to give this bot for it to, well, function. So then after all this is pretty much all the variables that you're going to be needing to give to your bot. Once again, this is just a very simple version, and you can actually add more of these algo bots as well later, but for this demonstration, I'm just going to be using this one. And so now that we understand what variables that we're going to have, then we need to be able to give it the variables that we're going to be needing. So after all this, that is your init function here. And now we can move on to our main function. So that's it. That's pretty much how you can create your own algorithmic trading bots. So just to go over it one more time, once again, you have your client and your API and your API secrets up here. And then you have this price updated class here. That'll actually get the prices from the Binance exchange. And I actually left out a little piece of this code because I did want to come back to it, which is the time.sleep portion. So now because we have a 1 minute interval, we do need to make the time.sleep 60 seconds. If you do make it 5 minutes, let's say, or an hour, so that you can get more accurate indicators, because indicators are more accurate on longer time frames. Then you can actually change this value to the exact value that you need. So let's say if you want it every 5 minutes, then you can make this 5, right? If you want it every hour, then you just multiply this by 60. So just keep that in mind. And this price updated class, once again, just connects to the Binance exchange and gets all the different ticker information that we can then give to all of our different classes. And this algorithms class here will just allow us to calculate the different indicators that we are going to be using. So for this example, once again, we have MACD, which calculates the short, long, which then is used to calculate the MACD line and the signal line, and the histogram, which we can then return. And it uses the exponential moving average, or the EMA, which we can actually calculate up here, like this, just separately. And after all of that, then we actually have the RSI, or the relative strength index, that we actually calculate down here, like this. And once again, if you do have more indicators that you want to use, you can actually add this to this algorithms class as well. I will also go over more indicators that you can add in my future videos, so make sure you subscribe and look out for those. And this next class here is just a check class. So this basically takes the values from the different indicators and checks whether we should give it a buy or sell signal. And once again, for the MACD, there are a ton of different indicators or different trading strategies that you can use. But for this one, we're just checking whether the histogram crosses above or below the 0 line, and we can use that to create trading signals. And for RSI, once again, can just create a sell signal if it's above 70, or a buy signal if it's below 30. And finally, this AlgoBot class takes all of that information and puts it together to allow you to actually create an algorithmic trading bot. So what this does, once again, is that it has an interval here, and it connects to the Binance client, and it gets all the different tickers for the symbol that you're going to be trading with. And then it will give it all the information that it needs to create buy or sell signals, and finally it will use those signals to generate buy and sell orders down here, like that. So this is just a very simple way of how the bot can work. And finally, to check this bot, we do need to create a little bit more code just so we can run it. Alright, so now let's try running this code. Alright, and here we go. So this printed out all the different MACD values. So as you can see, some of them are negative, some of them positive, which is perfectly fine. It actually didn't print out all the values because there are too many. I think there's about 3,000 different values, because we have the MACD line, the signal line, and the histogram, which are 3 values, and then we have a limit of 1,000. So I think it's actually trying to print out 3,000 different values, which we obviously can't do. And once again, you can also lower the limit if you want, but I mean, there's no reason to not have 1,000 really, as long as your computer can handle it. And once again, you can see here that it also prints out the RSI value, which right now is actually 52.167. So once again, if this value is above 70, or if this value is below 30, that means that, well, it will create overbought or undersold values. And as of right now, the MACD line actually says to sell, which means that the histogram actually just crossed 0. And once again, of course, the RSI would return none, because this value here is neither above 70 or below 30. Alright, so I just let it run for a bit, and as you can see, it has printed multiple times. So this right here actually just shows how the MACD has none, and the RSI is once again also none, just because it's still at 52. But basically, there's just a very simple and easy way to check. Once again, it prints out different values. And this is just a very simple way to check whether your bot is working and how it could run in the future. So there you have it. That was a very simple way to implement your own algorithmic trading bot with the Python and Binance API. Now keep in mind, before risking any real money, it is crucial to backtest your strategies and make sure you have risk management strategies in place. I would recommend just letting the bot run for a couple of days or weeks to determine how well the bot is doing, and then you can slightly change the parameters how you want. You can also start with a very small amount of capital and slowly work your way up until you find a strategy that works for you. Managing risk and capital is paramount if you want your strategies to succeed. If you're interested in learning more about the different trading bots that you can implement into your own portfolio, then make sure you hit that subscribe button and check out the rest of my channel. Until next time, happy trading.